Sometimes when you're self-employed, it's pretty complicated to have time for taxes. And because you have to chase the next dollar, the next gig, and what have you. So it's pretty complicated to think about tax planning, but also tax filing. So in today's conversation, I want to share with you our latest and best tax hacks for the self-employed. So here are the pro tips I want you to pay attention to. The first thing you have to do here is to estimate your business income. I don't care how many gigs you have. I don't care how many businesses you have. 3, 4, 5, 10, whatever. You need to estimate your business income. I'm not talking about you actually being precise to the dollar. No, you can just have a ballpark. So basically, are you making like 10 grand a month? Are you making 5 grand a month? Are you making 25 grand a month? Are you making 50 G's a month? It's really, it's all about estimation. So it's essential that you find out where you stand tax-wise before you start talking about, tax planning and everything. So you don't want to make expenditures, for example, in a year when you don't need that deduction. Okay. If you expect to be in a higher tax bracket this year or next, you want to take as many deductions as possible in the year you are subject to the highest tax rate. Remember, we're talking about 39%. That's the highest tax rate. So unless you estimate your business income, tax planning is guesswork at best. I'm not asking you to actually hire a CPA or whatever. No, but you got to really have an idea. See, it's all about approximation. You probably listen to me right now. The most important sources of revenue for you, but also the most important sources of cash outflows. Your most important, I would say, expenses. So you just need to have an approximate idea, a rough idea. So the first thing is you want to estimate your business income. The second thing is you need to time your income. Okay, you can't really postpone income simply by not cashing checks that come to you, or by telling customers not to pay you until after the end of the year, right? That'll be really weird. So income is generally taxable when it is available to you. However, you can time billing near the end of the year to your advantage. So you certainly can sell assets at a gain before or after the end of the year, depending on your tax situation. Okay. So if you have to bill, let's say you have to bill clients by November 1st, you can wait until December 15th to actually bill them. So they pay you like in January, something like this. Okay. So you want to time your income. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. The next thing you want to do here is to time your expenditure. So the same way you have to work on your income, you got to really time your expenditures. So there's always a surge in business equipment sales at the end of the year, and it's not entirely because computers and printers are popular holiday gifts. So if you buy business assets by December 31st, you can start depreciating them this tax year. You may even be able to take a Section 179 deduction and expense the entire cost of the assets in 1 year. This is pretty good. Okay. Now, business expenditures are counted as made in the year you purchased them, even if you use a credit card or other deferred payment plan and don't pay for expenditures until the following year. And so on the other hand, if you are on the cash basis, paying some bills can help lower your bill this year. So it's all about you trying to figure out what accounting method you have. Or are you currently following the accrual method? Or are you currently following the cash basis or something in between? So you got to have a clear idea about your accounting method, okay? And so don't bother buying inventory or supplies that will be part of inventory before the end of the year unless you need them, because you generally do not deduct the cost of inventory until you sell the product, because then when you sell it, then basically it becomes the cost of goods sold, and that's part of your income, because you're going to have to subtract cost of goods sold from revenue to get income. Okay. And so don't bother buying inventory or supplies. You only want to buy stuff that you can amortize. So that's what we call a fixed asset. Okay. Because if you want to depreciate an asset, it has to be a fixed asset. It has to be a long-term asset. Inventory, you cannot depreciate inventory. Okay. You can write inventory down, but that's another topic for another day. The fourth thing you want to do here is you want to make the most of medical insurance deductions. So you can deduct health insurance premiums for yourself, your spouse, and your dependents as an adjustment to income. So this includes what? It includes premium for long-term care insurance also, yeah. And so the policy does not need to be in the business name though. It is deductible even if it is in your personal name. That's totally fine, not a problem. By the way, boss, I want to quickly remind you of today's topic. We are having conversations about tax tips for the self-employed. I'm just sharing with you our latest tax hacks for the self-employed. The next thing you want to do here is to keep the form of your company simple. Okay. Don't try to complicate it. Don't try to complicate things. I mean, unless you need to form a partnership or a corporation for some reason, stick with a Schedule C sole proprietorship. It's the simplest way to file, and there is nothing you have to disband if you move on to something else. So if you're looking for legal protection, get liability insurance and consult your lawyer. I know that if you're looking for a legal protection, it's good to have an LLC. Don't get me wrong. It's great to have an LLC, a limited liability company. But the thing is that depending on the states you file your LLC in, there are some ancillary expenses that come with an LLC. And for instance, if you are a single member LLC or multi-member LLC, then you're going to have to either file Schedule C, 1040, or Form 1065 and Schedule K1. So it can be a little, it's not complicated. It can be a little convoluted, like a lot of work. But because when you have an LLC, you have other stuff going on. You have to actually file annual reports. You need to actually hire, you need to have a registered agent, either you or somebody that you actually appoint to be a registered agent. So there's a lot of stuff. Okay. And if you're an LLC, you can actually elect to be taxed as an S corporation or a C corporation, even if you're an LLC. The thing is, if you remain a sole proprietorship, you can just file your Schedule C 1040, not a problem. And the next thing you want to do is you want to automate your record keeping. See, the thing is that if we're talking about tax tips for the self-employed, the thing is that a lot of times around tax season, it can be really complicated if you're trying to really find where your receipts are. You know, like you're trying to really call your accountants or call people like, have you seen my receipts, whatever. It can be really complicated. So to actually ease everything, you want to automate your record keeping. Small business record keeping doesn't have to be as hard as it used to be. In fact, shoe boxes or grocery bags full of crumpled receipts should be a thing of the past. So use personal finance software that's synchronized to your bank accounts, and automatic record keeping not only saves you time, but is also less prone to mistakes. So this is something you need to think about. When we talk about personal finance software, you have a lot of them. Okay, you have YNAB, for instance. I mean, Mint used to be a good one, but they just are going to shut it down very soon. But YNAB is kind of cool. You have Good Capital. You have a lot of them. Okay. The next thing you want to do here is you want to understand automized deductions versus business deductions. See, if you're self-employed, because we're strictly talking about tax tips for the self-employed. If you're self-employed, basically you don't have quote unquote a legit business, but you're doing something on the side. You probably have a DBA, so you have a doing business as depending upon your state. So you don't have a normal, like a formal company, an LLC, an LLP, a C corporation, or an S corporation. But so you got to really understand that the difference here between automized deductions and business deductions. By taking a business deduction instead of an automized deduction, you reduce your adjusted gross income and your self-employment tax. Whenever possible, you want to deduct an expense or a portion of an expense as a business expense. Okay, it's very important because then it goes into your income level, which further sort of brings down your income tax, because you're going to have to actually transfer your business income on your Schedule C. So that's just a lot better. You want to pay your kids. Oh yeah, this is one of the best tips I can really give you here. You can deduct the amounts you pay your kids to work in your business, and the kids generally pay less tax than you would. So the first $5,950 the child earns is sheltered by the standard deduction, and any amount above that is taxed as the child's rate, which is generally much lower than yours. So this is something that you got to really think about, because it's not just about you trying to really conduct business. It's that you have to really optimize your tax situation too. And the next thing you want to do is you want to take a home office deduction. So if you have a qualified home office, you can deduct some of your otherwise non-deductible expenses, such as a portion of your home insurance, for instance, utilities, and rent. This is totally possible. Okay, to make this process easier, the IRS has actually devised the simplified home office deduction. So this is actually a scheme that allows taxpayers to take advantage of small business tax perks without the stress of lengthy calculations and record keeping. So every year they actually try to really, streamline the process to make it easy for business taxpayers to really file their taxes. By the way, boss, I want to quickly remind you of today's topic. We are talking about our latest tax tips for the self-employed. Tax tips for the self-employed. Another thing you want to really think about is actually avoid the hobby trap. See, if the IRS deems your business to be a hobby, you have to report any income, but you'll only be able to deduct expenses up to the amount of your income. So that's no deal if you're seriously trying to earn a profit, especially if you may clear a handsome taxable profit in future years. Now, it really helps to clear a profit in 3 out of 5 consecutive years, but you may still convince the IRS that you are a for-profit business if you operate in a business-like manner and keep good records. Okay, it's very important. It's important to operate in a business-like manner and keep good records. This harks back to what I said earlier about automating your record keeping. Okay, and so on the other hand, though, if you make a little income every year from something that really is a hobby, such as breeding dogs or carving lawn ornaments, you may want to keep it that way. Hobby income is not really subject to self-employment tax, which otherwise will be 15.3% of your net income from the operation. The next thing you want to do here is to turn actually charitable contributions into business expenses. This is actually one of the best tips we have seen in the last few years. So under normal circumstances, you cannot deduct charitable deductions on your Schedule C, right? However, if you give money to charities in exchange for advertising, it is a business expense. So basically, when you do it that way, if you structure the transaction that way, it will give you a greater tax benefit than an automized deduction. This goes back to what I said earlier when I was talking about the dichotomy between automized deductions and business deductions, and I told you it's always better to go with the business deduction. It's the same sort of piece of advice here. So you want to actually convert charitable contributions into business expenses so that you are able to actually get the larger, I would say, level of deduction. So this is important. You got to think that way for anything you do in terms of charitable contributions and anything else. You also want to increase your self-employed retirement contributions. This is, if you're listening to me right now, you're self-employed. You have to understand that contributions to IRAs are still limited, but you can contribute significantly more by opening a SEP, simple or profit sharing plan instead. Okay, and so this is kind of cool. You also want to track all business mileage. So whether you take the standard mileage deduction or your expenses for gas, oil, and other actual expenses, you must have good records to actually deduct vehicle expenses. And what will happen here is that your records must include mileage driven, the purpose, and the date. And you want to count every trip to the post office and client meeting. Those miles add up. This is kind of similar to the home office deduction. So the thing is that either you go with the standard rate that the IRS has set, or you want to actually go with actual expenses, which means that your level, the depth and breadth of record keeping must be really advanced. Okay, for you to actually justify, because the things like home office deductions and mileage are sources of IRS audit a lot. So the agency really sort of audits, taxpayers routinely for those elements. So you want to be on the good side of the law, and you want to be prepared for justification. You got to be able to substantiate anything you claim on your tax returns. And next, you want to check out your liability for the alternative minimum tax, the AMT. And so tax planning usually means finding more deductions and postponing income, right? But not always. You might want to do just the opposite if you may lose certain deductions because of the alternative minimum tax. So this is actually a parallel tax system that calculates your tax liability without the benefit of certain tax breaks, such as substantial itemized deductions. And what will happen here is that if your income tax calculated by AMT rules is greater than your tax under normal income tax rules, you pay the excess as AMT tax. So it is something that's a little tricky, but it's just a way for the IRS just to make sure that you are paying your fair share of taxes anyway, so that you're not actually at a point where you can just quote unquote game the system and not pay your fair share of taxes. So be very careful here. And it's one of those things where it's just a lot better to go with accounting software, because accounting software can really automate the whole calculation for you. Before I close to this conversation, let me give you a bonus here. I want to give you a few tips to reduce self-employment taxes, okay? And so if you're self-employed, so what happened here is that aside from the income tax, you will need to pay self-employment taxes that support the Medicare and Social Security programs. However, there are some ways you can reduce the amount you owe, and you can do it in a very big way. First of all, there are additional taxes for the self-employed. So there are many advantages to self-employment in comparison to being employed by someone else, like being able to set your own hours and not having to punch in every morning. But at the end of the day, your tax obligations are similar to those of employees. So aside from the income tax, you'll need to pay self-employment taxes that support those two programs I just spoke to you about. And this tax obligations can be daunting, but you can actually do a lot of things. For example, you need to understand a few things. Number one, think about the SE tax deduction. So the Internal Revenue Service actually requires anyone making $400 or more in self-employment income to file a tax return. So the return must include a scheduled SE, which you actually use to calculate how much self-employment tax you owe. However, when you're filling out your 1040, the IRS allows you to deduct a portion of the self-employment tax payments you make as an adjustment to income. So you can deduct between 50 and approximately 57% of your self-employment tax payments. And so the precise amount depends on how much self-employment income you earn. You also have S corporation savings. So if you create a corporation or a limited liability company, LLC, making an S corporation election with the IRS might present some opportunities to reduce your self-employment tax liability. So with an S corp, you generally pay yourself a reasonable salary or out of earnings, and you can distribute any remaining profits to yourself and any other shareholders or partners, or leave the money in the business. In certain situations, money in excess of your salary is subject to income tax, but not employment tax. So let me give you an example. If you operate your business as a sole proprietorship and you earn $100,000 for the year, self-employment tax is due on the entire amount. However, under the appropriate circumstances with an S corp, the amount that exceeds the reasonable salary you make is not subject to self-employment taxes. You can also try to reduce net profit. So Schedule C calculates your net profits from self-employment. You must include this as income on your 1040 and use it on Schedule SC to calculate your self-employment tax. Your net profit is equal to the gross receipts you earn minus your deductible business expenses. And the lower your net profit number is, the lower your self-employment tax bill will be. So therefore, to reduce your self-employment tax, you should be extremely thorough when preparing your Schedule C to help ensure you deduct every possible business expense. So your business expenses need to be ordinary and necessary to operate your business to be deductible. They cannot be personal in nature. So common types of deductible business expenses include office rent, the cost of acquiring and maintaining a business vehicle, telephone calls, office supplies, equipment, and so on and so forth. Thank you so much for your attention. I really appreciate it. In today's conversation, I'll just give you a few tax tips for the self-employed. And so basically, I gave you the pro tips and our bonus. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.